Welcome to the Coin Bureau Weekly Crypto Review. Here are this week's top headlines in the crypto news. CoinMarketCap has a heart attack. A pricing glitch makes every crypto holder a millionaire for a few minutes. What happened? Funding the future. Solana and Polygon announce hundreds of millions of dollars to develop Web3. Here's where all that money will go. NFTs Go Mainstream. Bitwise launches an NFT fund, Adidas NFTs sell out, and Coinbase doubles down on NFTs. Has the boom just begun? Ethereum Alternatives attract attention. Polkadot finally plugs in its first 5 parachains, institutions turn to Avalanche, and Uniswap announces a Polygon deployment. What comes next for these crypto projects? Crypto demand across the land. Japan, UAE, Germany, and the United States tease new investment vehicles for cryptocurrencies. Which coins and tokens are they for? Another week in Washington. The debt ceiling gets raised, the Federal Reserve kicks the money printer to the curb, and a tense stablecoin hearing has crypto holders on edge. How could these factors affect the crypto market? And a closer look at what comes next in this week's crypto market forecast. All this and more in just a moment. Good morning, afternoon, or evening. Thank you for tuning in. My name is Guy, and what you're about to see is educational content, not financial advice. You can find any topics you're looking for using the timestamps in the video timeline. And now for today's top stories. Last week, CoinMarketCap suffered a glitch which caused every cryptocurrency to go to the moon, at least on paper. BTC hit a price of $872 billion, whereas ETH hit a price of $81 billion, flipping BTC by market cap to become the largest cryptocurrency. Crypto holders around the world rejoiced, even though they knew it was all too good to be true. CoinMarketCap explained on Twitter that the price glitch was caused by an error CoinMarketCap thought it had resolved and reverted to rebooting its servers as the final fix. One of the consequences of this reboot is that the watchlist counts for every cryptocurrency have been reset, making it difficult to assess the popularity of any particular coin or token. On the bright side, it does reveal which crypto projects are fudging these numbers, and one of them is apparently the Internet Computer. If this is in fact the case, I wouldn't be all that surprised, and you can find out why by checking out my video about the project. That's in the description. Anyhow, in addition to making everyone in crypto a millionaire, if not a gazillionaire, CoinMarketCap's pricing glitch seems to have had a significant effect on a few cryptocurrency exchanges, something evidenced by their trading volume. Whereas Coinbase COO Emily Choi brushed off the issue as being, quote, indicative of an emerging industry, Crypto.com CEO Chris Marszalek even went as far as to say that, quote, we are already working on removing CoinMarketCap's unreliable price feed from our product. Competitor CoinGecko consequently replied with an appropriate GIF, as it seems that its crypto pricing feeds were unaffected. Interestingly, FTX was one of the few exchanges that was apparently unaffected by CoinMarketCap's outage, suggesting that FTX is a more reliable exchange than its counterparts. If you're interested in creating an FTX account, be sure to check out my tutorial in the description, which includes trading fee discounts. Now, although all the money showing up on CoinMarketCap was fake, all the money put down by 2 crypto projects last week was very real. Polygon took the top spot by partnering with Reddit co-founder Alexis Ohanian to introduce a $200 million fund for decentralized social media projects. This is one of many multi-million-dollar funds announced by Polygon in recent months, and though it's not entirely clear how much capital each of the parties put down in this particular fund, any money put down by Polygon is probably coming from sales of the MATIC token. This has created a lot of sell pressure for MATIC, which has suppressed its price, but continued demand for Ethereum's leading Layer 2 has kept MATIC in bullish territory, and an announcement I'll be talking about later could send MATIC interstellar. Anyways, Solana came in second place with its own $150 million fund for crypto gaming, something that is intended to add to the $100 million Solana put down for the same purpose last month. Solana's goal is to incubate crypto projects to compete with leading play-to-earn emperors on Ethereum, such as Axie Infinity, which you can learn about using the link in the description. Solana is also pushing to create decentralized social media platforms of its own, something that's been partially founded by Reddit co-founder Alexis Ohanian as well. As Messari mentioned in its recent crypto predictions, cryptocurrency could see its, quote, Satoshi moment for decentralized social media in 2022, and it's going to be interesting to see which blockchain it will be on and how it will leverage NFTs. I'll be doing a breakdown of Messari's crypto predictions tomorrow, so be sure to stay tuned for that. Speaking of NFTs, Bitwise has launched an NFT index fund in the United States, which is unfortunately limited to accredited investors for the time being. The index consists of 10 NFT collections, primarily CryptoPunks, the Bored Ape Yacht Club, and the Mutant Ape Yacht Club, which I happen to be a member of. The Bitwise website specifies that, quote, collections considered for inclusion in the fund are monitored for certain risks as set forth in the index, selected and weighted based on an adjusted floor price market capitalization, and rebalanced quarterly. This suggests that other NFT collections could be added to the Bitwise NFT fund in the future, and it looks like Adidas NFTs might be on the list. Besides being backed by the Bored Ape Yacht Club, Adidas NFTs have been selling like hotcakes ever since the drop on Friday, briefly beating Axie Infinity as the most popular NFT collection by trading volume. As reported by Decrypt, even though Adidas attempted to limit its NFT purchases to 2 per person, a clever coder managed to create a custom smart contract to claim 330 NFTs. Assuming they sold when the Adidas NFT floor was 0.8 ETH, they've made close to $1 million, minus $100,000 in Ethereum gas fees. The best part is that the buyers of these Adidas NFTs will soon be able to see them within the Coinbase wallet thanks to an upcoming NFT integration. As I mentioned in my video about the testimonies by CEOs on Capitol Hill, Coinbase data suggests that more than 50% of crypto holders are doing more than just investing and trading with their coins and tokens. Coinbase has consequently shifted its focus to NFTs and the metaverse, and noted in a recent blog post that it's looking to build, quote, an identity on-ramp into the metaverse with the help of the Ethereum Name Service, or ENS. This suggests that one of the primary value propositions of NFTs and blockchain domains such as ENS is decentralized identity, something which is crucial to the continued evolution of cryptocurrency. While Ethereum appears to be in the lead in this niche, there are plenty of Ethereum alternatives looking to take a cut of the NFT and decentralized identity pie. One of the most popular Ethereum alternatives is Polkadot, and that's because Polkadot founder Gavin Wood is one of the co-founders of Ethereum, the inventor of the Solidity coding language, and even coded the first iteration of Ethereum. Over the weekend, Polkadot finally plugged in its first 5 parachains, bringing smart contract functionality to the Polkadot ecosystem. Parachain slot auctions are the process by which crypto projects secure a parachain slot, and the winners of the first round were Akala, Moonbeam, Parallel Finance, Astar, and Clover. The second round of Polkadot's parachain slot auctions will begin this Thursday, and if you're interested in participating, you can refer to my tutorial in the description. Now, as amazing as Polkadot sounds on paper, price action suggests that most of the attention has been on Avalanche as of late. According to the Bank of America, this is because Avalanche makes it possible to deploy extremely scalable standalone blockchains called subnets, which leverage Avalanche validators for security. Avalanche also leverages the Ethereum virtual machine for smart contracts, which makes it familiar to investors, users, and developers alike. In response to the institutional demand driven by these and other factors, cryptocurrency custodian BitGo has added support for Avalanche's AVAX coin. This will make it possible for cryptocurrency exchanges Bitstamp and BitBuy to list AVAX as well, and they plan to do exactly that in 2022. Meanwhile, Uniswap has announced that it will be deploying on Polygon, which is of course Ethereum's leading Layer 2 scaling solution. The news comes after more than 99% of Uni token holders voted in favor of Polygon co-founder Mihailo Bielic's proposal, which I covered in my recent Polygon update. Uniswap is the largest decentralized exchange in cryptocurrency by total value locked, and the $15 million of long-term liquidity mining rewards put up by both projects could see some serious capital flow from Ethereum onto Polygon. The deployment is also likely to inspire other popular Ethereum dApps to do the same, though many of them have done so already. Use case and ease of use is what will ultimately decide which smart contract cryptocurrency takes the lead in the long term. And for the time being, it's clear that Ethereum can't be caught. As the saying goes, however, the key is diversification, and this is something that both individuals and institutions are itching for when it comes to crypto. A perfect example of this is the recent crypto fund for Japanese investors launched by SBI Group, one of the biggest financial companies in the country. The crypto fund consists of 7 cryptocurrencies: Bitcoin, Ethereum, Litecoin, XRP, Polkadot, Chainlink, and Bitcoin Cash, with BTC, ETH, and XRP making up most of the pie. This could offer some much-needed relief to XRP holders who have been gutted by the SEC's ongoing lawsuit against Ripple. More about that in the description. In the United Arab Emirates, one of the largest wealth funds in the world is also looking to get exposure to crypto, with its founder saying that it's already begun investing in cryptocurrency companies. Given that another UAE fund dumped its BTC to load up on ADA and DOT earlier this year, something tells me that altcoins are going to be where much of this capital is allocated. In Germany, 400 savings banks are scheduled to vote on whether to offer crypto trading to their 50 million clients, which collectively have over $1 trillion in assets. It looks like they'll be voting in favour because German special funds were given approval by the German parliament to invest some of their $400 billion into crypto, proving there is crypto demand from top to bottom. In the United States, Galaxy Digital partnered with Bloomberg to create another Solana fund for institutional investors. I say another because Grayscale recently released a Solana fund of its own, which has so far seen over $10 million of inflows, and that's despite the market dip. This suggests that institutional demand for Sol is as high as ever, despite the recent FUD about Solana's supposed centralization. The truth is that every crypto project has its pros and cons, and you can learn more about Solana's strengths and weaknesses by watching my recent update about the project, and that is in the description. Now, ideally, all these cryptocurrencies would have ETFs of their own, but that's a long way away because of regulators and politicians in the United States. It's been another busy week in Washington, with politicians voting to raise the debt ceiling for the dozenth time, while producer inflation hits an all-time high. It looks like they've delayed their decision on the Build Back Better bill, which will pump another $3 trillion into the economy. It's possible that the bill will be scrapped altogether now that one Democrat politician has broken ranks. His reason? Inflation, obviously. Inflation which is obviously being undercounted. More about that in my latest video. Now, this inflation is the reason why the Federal Reserve announced that it will be reducing the amount of money it's printing and start to raise interest rates early next year. In terms of a timeline, the Fed is looking to stop buying up government bonds in March and begin raising interest rates shortly afterwards. This happens to correspond to when many believe the end of the current bull market will be, and some would say that this confirms it. Another thing that could trigger the collapse of the crypto market is a stablecoin crackdown, and the recent stablecoin hearing suggests this could very well be on the horizon. Now, I'll start by saying that I didn't manage to find the time to watch the hearing in full, but my first impression is that it was the opposite of the crypto CEO hearing, meaning that politicians were much more combative with the crypto personnel present. What both of these hearings have in common is that Democrats seem to be the ones pushing for aggressive stablecoin regulation, whereas Republicans are pushing for a more reasonable approach. Note that most of this sentiment is coming from a few outliers on either side. Still, this could have some serious implications for the 2022 midterm elections, according to a survey by crypto VC Andreessen Horowitz, which suggests that the average American voter is overwhelmingly pro-crypto and would be unlikely to vote for a candidate who is anti-crypto. This means that if there is a crypto crackdown in the coming months, it may be reversed by new policies proposed by pro-crypto politicians who win in 2022, whoever they might be. This would coincidentally set the stage for a 2023 recovery. Funny how these things happen. Turning to the charts, we can see a beautiful divergence for BTC on the daily, with prices dropping while the RSI rises. As I mentioned in my video about swing trading, when you see this kind of divergence, it usually means we're about to snap to the upside. If we go back in time, we find a similar divergence between BTC's price and the RSI at the end of September. And you can see what happened after that. Not saying it will happen again, but just something to keep in mind going forward. I'll also point out that we have a record $8.2 billion in options expiring at the end of the month, and exchange balances of both BTC and ETH continue to drop. So get ready for some really insane volatility. This week's winners are Yearn Finance, Arweave, Avalanche, Terra, and Harmony, which is probably my favorite winners list so far. Yearn Finance's Wi-Fi token is pumping on the release of a proposal to adjust Wi-Fi's tokenomics. The details are outside the scope of this video, but the TLDR is that the Yearn Finance protocol has begun buying back boatloads of Wi-Fi, which is boosting its price. I'll leave the details in the description if you're interested. Unfortunately for Wi-Fi, it has basically been trading sideways since last summer, and I can't spot a clear pattern on any time frame. If anything, there's a head and shoulders on the weekly, though it's apparently been invalidated by Wi-Fi's recent pump. As for Arweave, AR is pumping because of the prolific partnerships the project keeps making, the most recent of which was with Near Protocol. For those who don't know, I hold AR as part of my cryptocurrency portfolio, and that's because Arweave provides permanent decentralized data storage for Solana's blockchain history and seems to be on the cusp of doing the same for other top-performing cryptocurrencies. AR has been on the decline since November, but it seems to have broken that trend and is back above a significant zone of resistance at around $50. It looks like it's going to be another green week or two, but remember that nothing goes up forever. Avalanche is next on the list, and AVAX is pumping for the reasons I mentioned earlier, namely institutional interest. USDC also launched on the Avalanche blockchain last week. AVAX is looking amazing on the daily, though its massive market cap means it will have a hard time pulling more than a 2x in the near future. It also has no shortage of competition from other smart contract cryptocurrencies. One of these is Terra, and though Terra is not a direct competitor to Avalanche per se, Luna has made a name for itself as the only crypto that keeps pumping even when the market is dumping, which has the side effect of attracting even more capital. That said, the real reason why Luna is pumping is because Luna is used to mint the UST stablecoin, whose market cap has grown at an exponential rate since the start of the year, driven by the demand for Terra's next-generation DeFi protocols. Luna is close to hitting another new all-time high, but it looks like it might need a little correction before it reaches for the stars. Harmony is also a smart contract cryptocurrency, and its OneCoin is pumping because of the news of a completed Chainlink integration, introducing the robust data feeds that Harmony dApps need to succeed. On that note, the total value locked on Harmony has grown substantially over the last 2 months, and new, novel dApps continue to deploy. Put simply, its ecosystem is growing, and quickly at that. The OneCoin is currently contending with a historical zone of price resistance at the 22-cent mark, but the momentum of its price suggests it should punch through in the next week or two. If you want to learn more about Harmony, you can check out my most recent update about the project using the link in the description. And that is all for today's Coin Bureau Weekly Crypto Review. If you enjoyed it, you know what to do. Hit that like button, subscribe button, and bell icon too. If you want more of me, head on over to Twitter, TikTok, and Instagram to get a sneak peek behind the scenes. If you join my Telegram channel, you'll get the daily crypto updates you crave, and signing up for my weekly newsletter is a great way to get the tools, tips, and tricks you need to get paid. And of course, you can support the channel by heading over to the Coin Bureau merch store and picking up a shirt or hoodie, or hey, both. Links to all these resources are in the description. Thank you so much for watching, folks, and I'll see you all in next week's episode.